We should be going live here on YouTube. Perfect. So live on YouTube, live on Instagram, and we're here to talk about investing in real estate, especially those who are looking to get started in learning how to flip property or even buy and hold. For those of you who aren't familiar with me and this is your first time coming across the channel, my name is Carl Pierre. I am the founder of this channel, I guess, or the creator of this channel called entp Life. I'm a serial entrepreneur with experience in healthcare staffing, home healthcare. Spent some time as an X-ray technologist, MRI technologist, CT technologist, blah, 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 blah. And I invest in real estate and have been investing in real estate since 2006. I now own and control a fairly sizable multi-million-dollar real estate portfolio comprising of commercial real estate, which is performing real terribly, and a lot of residential real estate, 1 to 4 family type of projects. And last year, towards the end of the year, I developed a program called Killing the American Dream, where I teach people my approach to investing in 1 to 4 family real estate. It's really condensing down what I've learned over the years and a lot of information that's publicly available, but it's really putting it into a format that is just me teaching you my approach for about 15 hours worth of time. It's broken down into very specific sections like building your team, analyzing projects, managing your projects, disposition or exit of your projects, refinancing, how to acquire debt, all the nuances. But I decided to do one thing slightly different than I see most people who are teaching courses, and that's to add a layer of mentoring. Now, a lot of people do the mentoring, but not like this, and that's what we're going to be talking about today. So for those of you who already are tuned in, if you can, just let me know just quickly what brings you to the live today. What are you looking to learn? Just to make sure that I touch on some of these points as I'm going through my spiel for the day. I usually give about 5 minutes of time for people to come through. That way we have enough of an audience to really have some engaging conversations. That's what this is for. Every Sunday I put out a video. Well, maybe like 49 Sundays of the year I put out a new video. The other Sundays I take off because I'm a human being, and sometimes I don't want to do something on a certain day. So I put out a video on Sundays, and then I follow up with a live on Wednesday. And I felt that that was a good way to kind of do a deeper dive into topics and make sure that people are able to ask questions and get to know me, get familiar with my style of teaching and just talking in general. So these lives kind of have like a podcast feel to it. It's a lot of me talking and then some Q&A that comes over as messages on Instagram and YouTube. Usually I just prompt those on Instagram to come on over to YouTube, but today I'm going to try to keep Instagram open for the entire time and distribute the time. So please just let me know what you want me to touch on, if anything. If it's something off topic, I'll save that to the very end because I do talk about investing in international properties here on the channel. Aviation is one of my other things, which I don't talk about as much as I love, just because it's so different from what I typically cover, which is real estate, business, and international travel, and actually building an international real estate portfolio. So the format of this is going to be, I'm just going to talk for about 5 or 10 minutes about the work that kind of goes into this Invest and Learn program, the sort of projects that we're doing, the sort of projects that I do, what I think are like the benefits of this program, the deal that I highlighted on Sunday's video, and then we'll go into the questions. And depending on what those questions, where those questions lead us, the conversation may evolve a bit. So far I have a few questions or a few statements that are coming over on from YouTube and Facebook regarding never owning property before and looking to purchase a first multi-unit. Perfect, you're in the right place. Can't wait to hear about Hillsdale, New Jersey flip. Perfect. We're going to be talking about that. Looking for the latest and greatest news and killing my likes. Perfect. Yeah, make sure you like these videos, first of all. YouTube is funny in that way that the more people who are on and the more people who are liking and sharing and engaging with the lives, the more they kind of push it out to people who may have common interest. So that would be kind of your favor to me of helping to promote the channel and get more subscribers here. Because the more subscribers I have, the more motivated I am to do more things. The more ideas I get, people ask questions that prompt me to do videos that I may not normally think of my own. And the more people who are on the channel, of course, the more I get paid, which is great. So the more people who are on the channel, the more people who are watching videos, the better the ad distribution. And that's why I don't like Instagram. The people over at Facebook are freaking cheap. It takes time to put together good content, and they don't do anything to incentivize creators. YouTube does. YouTube would do ads sharing with you. Facebook is not about that. Maybe Facebook is. I think Facebook groups might do something like that, but I don't know. I like YouTube. Sorry, Instagram. Justin says, what's the minimum amount of cash flow per door is ideal? I'll get to that later on, but make sure you stay tuned because what's ideal is relative to you and what your goals are and what your objectives are. So not a really good answer. All right, so let's dive into it. I think we have enough presence here. Make sure you like, subscribe, share, all that stuff. If you want your comments and questions to be posted on my main screen on YouTube, because I'm able to highlight questions like Justin's question here, that way everybody can see it and make sense of what's being asked. Make your way on over to YouTube and participate in that way. If not, I'm just going to keep my Instagram live open here so people could rewatch it in the future. Okay, perfect. So backstory, started investing in 2006 in college rentals, basically out of need. We needed housing, me and my friends, some of my fraternity brothers, and that was kind of the best option to buy rather than rent a house in the neighborhood. That property proved to be cash flow positive. We went on to get a few more. Market collapsed in 2008, 9, 10, that era. But that allowed me to learn a lot. We only lost one property out of the first three that I participated in. And that was because one of the partners was a jerk and decided on his own to surrender the property because he wasn't willing to put in equal work. And that property was in his name, so he got frazzled when everybody started putting pressure on him to actually step up, and gave up the property and surrendered the deed in lieu of foreclosure because he knew that he wouldn't be able to cut it on his own. Sucker move, but it taught me a lesson about who to partner up with. But since then, I've been able to figure out, especially in hard times, how to get your hands or how to get my hands on capital to do deals, what sort of conditions are good for flipping, what sort of conditions are good for buying and holding, and ultimately how to approach properly flipping properties. My preferred investment style is to buy and hold. The reason for that is because flips are kind of tedious, too many people involved. It's you, the buyer, both of your agents, your attorneys in representation, inspectors, appraisers, just too many characters involved and too many voices. Too many chefs spoil the pot or whatever, too many cooks in the kitchen, whatever that expression is. It's kind of the same thing with real estate transactions. Multiple people, and I just don't like it. The favorite transaction is to buy, renovate, making sure I hit items that are more likely to be detrimental to a cash flowing property, like a boiler change, hot water heaters, or not so much, they're pretty cheap, but boiler, water heater, roof. Those are things that I definitely want to touch on when I'm preparing for flipping a property that I plan on holding. So I look at improving the aesthetics of the property, because obviously that's going to allow me to charge on the higher side of the rent. But then I look at, okay, if I'm going to be holding this property for 5, 10, 15 years, 30 years, whatever the term is, if I'm going to be holding it for that time, I don't want to have to change the roof with my cash flow when I could have bundled that in and bought at the right price. And if I bought at the right price, I could have bundled in all of these repairs into my initial mortgage or into my initial buy and finance that over a longer term rather than having to repair a roof for $10,000, $12,000 out of pocket, $6,000, whatever the roof size is and style is. So that tends to be my approach. So my program really focuses on how I think about properties, how I vet them, how I manage them, and gives it to you in a way that you can start to reproduce it. However, a lot of people who are just getting started, for some reason, there's a large percentage of people who automatically want coaching and mentoring. And I think that could be a good strategy because you're buddying up with somebody with more experience than you. But if you're one person and you're kind of public with it, you get inundated with how many people want that one-to-one guidance. So I thought, well, if I were just starting out, what sort of guidance would I want? And what sort of guidance did I look for when I was pursuing getting more education? The first deals I did were just kind of dumb luck, and it just worked out. But I wanted to get more proficient and more professional with how I did my deals. And I started going to seminars, and all of them, were these programs that just upsold you into different levels of the program and then upsold you into mentoring, but never gave you access to an actual deal. And I thought that was ridiculous. I was like, I don't want to spend money just learning anymore. I want to spend money and have my, feet in the fire, so to speak, because that's going to be the best way for me to be committed. If I have my money on the line, I'm going to be paying closer attention. And if they have their money on the line, then I know that they're going to be interested in the success of that project. So I felt like it split. Approaching it in that way would split the desire to succeed. And whenever I approached these gurus or these flip your house guys and said, hey, this is what I want to do, I never got a positive response. And that I suspect that's because they're in the business of just selling hope. And that's not me. So I said, when I get to a point where I'm in a position that I have enough experience, I know what the hell I'm talking about, I have the time and the ability to put together a program and the right team that's going to support this group, then I'm going to do a program that allows people to participate in deals with me. That way, it's just another way for me to raise money. It's a way for me to expand the territory that I invest in. And it's a way for me to kind of cultivate a community of people who might bring deals to me or who might do bigger deals with me when there's a need for higher capital calls. So if I'm able to kind of build out a tribe of people, so to speak, that speak my language, that understand what I'm looking for, we're all talking about the same thing, we're all targeting the same thing across the nation, then we have a pretty powerful force between us. And at the same time, people get to benefit. There's so many people that can, making an extra $30,000 a year, $50,000 a year is substantial. You can make that on one deal, and doing one deal a year is a good pace. An extra $30,000 for a lot of people is a part-time job, could replace their income. There's some people who are only earning $30,000, $40,000 a year. So a $30,000 payday in a given chunk while you're still doing your other job, because if you're doing one flip a year, this doesn't have to be a full-time thing, right? That this is something that could totally supplement your income. You could handle before and after work, especially on weekends. And I think it's a good way to kind of build some money if you're flipping. If you're buying and holding, it's an excellent way to build long-term wealth. And what I try to teach is like a ratio of 4 holds for every 1 flip, because that 1 flip is going to help you build up your cash so you can do more holds, and it's going to maybe give you some like immediate gratification every now and then. It could help you pay for your team. It could help you pay for marketing. So I like to look at flips as generating a bulk of cash that gives me options, and then the holds as the easier transaction and also long-term yield. On a flip, yeah, you may cash out $40,000, $50,000, $100,000 at a time. on an asset that may have generated you $1 million over the life cycle of that asset. So if I have the option of earning $1 million over 30 years or earning $40,000 in 1 year, I'm going to typically go with $1 million over 30 years and that's something I could still kind of pass on and kind of hopefully generates income in perpetuity. Okay. So that's kind of what I teach on my channel. That's why I did this. A lot of people might ask, if you're successful in your businesses, why are you selling a course? Why? It's another way of making money, of course. But more importantly, it helps me branch out to different territories, meet different people, different skill sets. I might meet contractors along the way, electricians, tradesmen, people who are awesome real estate agents, people who are awesome at scouting properties, wholesalers. Also, I'm able to generate money from a program that also deepens my network. I think that's a win-win. And relative to how much I make, it's pretty small. But I like to do it. I like to teach. Even the channel is all about giving people ideas, even outside of real estate. And you see that not all those things I monetize directly. So it's not just a money grab. I don't know why people who teach courses, I guess I know why, because there's a lot of crappy courses out there. But for those who are selling education directly, we tend to get this rap of, well, why do that? No different than why someone who, I don't know, founded a tech company turns around and develops an accelerator, turns around and founds a VC firm. Yeah, it's cool to make more money, but it's even cooler to do great things with other people and be able to empower another generation of people in a way that you wish that you were. A lot of business startups and a lot of successful entrepreneurs kind of went through things the hard way. Sometimes that conditioned them for real life, but there are certain things that if they had known them early on could have saved them 5 years in their business venture. And if they could pass that on and pay it forward to somebody else, they would love to, right? Especially when you're an entrepreneur, there's so many people who aren't. So it's like exciting to be in a room full of people who are into the thing that you're into. So it's kind of the same in that regards. So that explains that. Now let's talk about the deal. So this deal in Hillsdale, I actually got it from a wholesaler that I've purchased multiple properties from. His name is Jordan Horowitz. And he's always sending me deals. And when something comes across that I like, I'll go into my due diligence and investigate whether or not it's a good deal for me, analyze it to see what the potential profit point was. On this deal, it was anywhere between $40,000 and $100,000, depending on what sort of surprises we came across during construction. We came across quite a few. So we might only turn around $40,000 profit when it's all said and done, after fees, carrying costs, all that stuff. It was a funky layout. And if you go to check out that video, the way that they managed the upstairs section, it was like partially railroad style, bad distribution of space, horrible. The first floor also has more of an open format, but the distribution is a little weird. And we've gotten some pushback from potential buyers about that, because they don't know how. A lot of buyers cannot envision how to place their furniture. So if a layout is a little weird, they get stuck and they're like, well, I'm going to be here for, everybody wants to buy their dream house. And because of that, once something is slightly different than what they would expect, they get spooked and move on. But the neighborhood's a solid neighborhoods in Bergen County, good schools, commuting distance to New York City, safe neighborhood, comfortable neighborhood, which made me like it. The deal was sourced from a wholesaler. We financed it amongst the group who's in the Invest and Learn. They get lifetime access to my course for participating, and they get a percentage of that deal. It's typically about 4% for every $10,000 of contributions. And then we split up the shares in that sort of way. So we're collectively putting together a new single purpose LLC that's purchasing a property. Myself and those who are being mentored are shareholders. It's not shares, it's membership certificates, but we're shareholders of this LLC and we're investing in it together. So it's not that I'm raising money from unaccredited investors or something along those lines. No, this is a partnership that's created between us. Capital's contributed to this single purpose LLC, and then we all participate in the flip. This is not a passive investment. This is an active investment. What the real estate agent that we're listing with was vetted by the entire team and isolated by one of the team members. So this is the sort of stuff that we do where we share my resources, but we also encourage people to go out and discover just as they would if they were doing the deal on their own. That way they're building that muscle memory, building the skills that are needed. We may do multiple projects together, or people who are in that deal may invest in another, invest and learn, just once again to sharpen their sword, tighten up their skills, or they might be ready to go with just one deal. So the amount of times that you could come back into another group is totally up to you. But one of the key things is that you have to be an active member and manager within this deal. Now, the deal was, like I said, structured between a cash infusion by the members and then hard money for the balance of the loan and the construction. We're in for about $380,000 to $390,000 at this point, maybe tapping on $4, and we are listed at $488. So after our carrying costs over the next few months, while we're getting out of it, brokers' commissions, any miscellaneous fixes that we need to make, our attorney's fees, our closing fees on this deal, by the time it's all said and done, we'll probably be stripped down to about $40,000. So for every $10,000 that somebody put in and they got their 4%, their return on investment would be 4% on that $40,000 spread, plus their initial investment. So they get their $10,000 back and probably another $1,600 to $2,000 back in cash for every $10,000 that they're in, which is pretty good. A 16 to 20% return in 6 to 7 months. That's way better than the typical stock market performance, and better than your savings account, better than most conventional products. So that's kind of how the deals are structured and how this deal was particularly structured. The construction on this took about 8 weeks. Worked with my typical team, used the finishes that I use in a lot of the properties that I do. It's one of the things that I teach. You want to be kind of methodical and systematic with how you approach your flips. We have a few different color schemes. We have a light floor, dark floor kind of concept, lighter kitchen, darker kitchen, white bathroom, grayish bathroom, or, sometimes we play with the bathrooms a bit, but it's typically whites to neutrals in all the properties. That way, you're not going to be too off-putting to anybody if you start to get creative. If I get creative anywhere, it's with fixtures, sometimes with tile selections, and I try to do things that are a little more timeless and not of the moment. But those are the things that we cover in the course. Now, I think the property came out pretty nice. There's a few things that I would have done slightly differently. However, at this point, I am not the primary project manager. We have a project manager within our company, and he has the freedom to make his own judgment calls on certain things to mitigate the budget or to ensure that we finish on time. And those sometimes drive his decisions slightly out of the box or things that I would disagree on or I would have done differently. However, he doesn't have the authority to just increase the budget or change the style that was given to him unless there was some sort of circumstance that kind of forced him into that situation. So I get it, and if you're watching, David, I'm not knocking you. It's just that stove is something that I wouldn't have purchased at any point. I would have even left it blank than to have that stove in there because it's kind of off-putting. And we're replacing it. And I would put that stove in a rental, but not in a property that I'm flipping. And those are the little tidbits that you do learn in the course that helps you to put you in a better position so that you're doing the best that you can to exit well, and what sort of mistakes to avoid. Okay. And that's pretty much it on the overview of that deal. I'm going to go over to the questions now, and allow you guys to let me know what you want me to kind of dive into a little bit deeper, and what sort of uh, feedback are you looking for that maybe I haven't quite addressed. So the first statement that came in was a little earlier. I never owned property before and would like my first purchase to be a multi-unit. I think that's a good idea. Are you planning to occupy that first property, kind of to hedge and offset your liability on the property? I think that's a really good move, where you're buying a house where you're either living in a room and renting out the other rooms, living in the basement and renting out the upstairs, like I've done. You could buy a 2-family, 3-family house, especially when you get to 3 and 4 families. You tend to realize that 2 units typically covers the obligation. So once you get to that 3rd and 4th unit, you really start to cash flow, especially when you live in there. So if you want to be in a situation where you're either living absolutely for free or you're living for free and cash flowing, you're going to want to be in something that has 3 to 4 units. Hillsdale property, I just spoke about that. If there's something in particular that you want to know, let me know. Kike Lomo. Okay, Kike Lomo. I'd eventually like to own several and like to know the best way to begin. I think the best way to begin is try to buy a 3 to 4 family property that's in decent shape, like livable. Buy it with a FHA 2 or 3K streamline loan. That gives you, I think, $30,000 or $35,000 of renovation budget with very little paperwork. Slap a new roof on it. Make sure that your boiler and water heaters are updated. Update the unit that you want to live in, and make sure that it's painted, floor coverings, things are neat. That could be your first property. It won't be the best buy where you're going to have like a bunch of equity in it, but it's going to give you the mechanics of what it's like to go through the process, what it's like to buy a home, the inspection phase, the appraisal phase, getting approved for a mortgage, and then managing renovations. And it's going to be light renovations. That prepares you to do more and more complex sort of purchases. All right. So that's kind of how I would recommend someone start if they're starting independently. If you're not starting independently, I would recommend doing what I'm doing here. And I think anybody who is looking to invest in real estate, you should take a course, not like a real estate salesman course, but a real estate investing course. Because my course is $97 a month if you pay on a monthly basis. And what you'll learn in a month or in 2 months will save you way, way, way more money if you just went at it haphazardly. It's going to save you time. It's going to save you money. It's going to save you from potentially making mistakes. It's going to prepare you for what you're getting into. So for 2 months, 3 months of being in the program, you're really going to learn a lot, and you're going to protect yourself from making a more costly mistake. All right. So that's what I would recommend if you're getting started. And if you want to do a group investment and get together with other people who have more experience than you and you invest alongside them, I would recommend that as well, whether it's with me or with somebody else. Learning from people with experience is good, but you want to make sure you get your feet wet. And by get your feet wet, I mean have your money in the deal, because it's different to just be a spectator and to be in it. A different anxiety comes over you when you're in it. A different pressure you put on yourself is there. All right. So let me cycle this out before. Okay. So I hope I answered that question. The latest and greatest news are killing your likes. The latest and greatest news are killing your likes. I'm not sure what you mean by that, Regina. Let me scroll back up. This froze. Oh no. Okay, now we're back. Bingo. Okay. Tyrone Avila, looking to take in the analysis of Hillsdale property. That might have to be a completely different video because that's going to take a while. But you see, I have a previous video that shows how I analyze a deal. I have a deal analysis spreadsheet that's also inside of my Killing the American Dream course where I just plug in the numbers. And, you know, that's kind of a really juicy part of it. So I have that available for free here on the channel. It's already covered, so you can look out for that. It's actually a video kind of stating what real estate investors, not real estate, what real estate agents need to know to kind of appeal to investors and how I calculate the numbers. But I'll find that video is what I'm looking for now. And I will share that link so that you have it. There's flipping a house, life as an entp. Where is this thing? Sorry for the delay, but I don't know where I put this. How to flip a deal, Pimsleur. Man, I'm looking back at some of these old videos. It's funny. Real estate investor, how to pitch. See, here's a video that gives exactly how to analyze a deal. This was back in August of 2019, an earlier video. So I'm going to put that in the comment section below. And then you could reference that. And it's really how I crunch the numbers on a deal. And that spreadsheet's available in my course now. And we use that to analyze the deals that we process. What's the minimum amount of cash flow per deal is ideal? Okay, this is the question that was asked earlier. So Justin, the minimum amount of cash flow per deal is really on you. What I strive for is at least a 3% spread of cash flow between what I generate in rent and what I'm paying out. So what do I mean by that? I generally follow the 1% rule, where I want my property to generate at least 1% of its value in rent. Okay, so if the house is valued at $180,000, I expect to generate at least $1,800 a month in rent. That doesn't mean I have an $180,000 mortgage. I might only have a $120,000 or $130,000 mortgage on it, which is good. It puts me in an even better position. Now, the reason why I have it that way, let's just call it a $100,000 mortgage on a property that's worth $180,000. One of my properties right now, 14 Brown Street, is in that situation. I think I'm getting $1,800 or $1,900 a month for it. I just got a new tenant, and my debt on that property is like $100,000. Okay, so on that $100,000, I have a 6% mortgage, right? And that's because I use a rapid refinance, so my rate's higher. So that mortgage is going to be $600 in interest on that $100,000, right? About $600 a month because of the 6%. Then I have my tax liability, which is probably going to be another $500. It's New York, so it's expensive. So that bumps me out to $1,100. So I still have, and that's also with insurance included. So I'm going to have about a $600 to $700 gross spread above my debt obligations. And the only other thing that I'm paying for in that property, since it's a house rental, is water and sewer and garbage. And that's charged on a quarterly basis. It comes out to like $150 a quarter, so like $50 a month. So when you look at that on that property, good times or so, I cash flow about $500, right? While paying down my debts, etc., while getting depreciation, etc. But the way I'm looking at it is, what is my spread overall, right? So if I'm paying out 6% in a mortgage, and I'm generating 12% gross, once I factor out the mortgage, that means I got to still have a 6% spread. Out of that last 6%, my goal is to at least have a spread of 3%, right? So in that 3% scenario, it's going to be about $540 or so that I want to cash flow out of that 1,800, right? Not out of that portion. So let me do the math so I'm not misspeaking here. So 1,800 times 12 is 21.6. Okay. My goal is that I want that property to give me a spread of at least 3% of that value for that year. Okay. So if I'm generating 12% in gross on that property, that's the $21,000, 21.6, and that's if it's valued at 180,000. I'll be generating 12%, which is that 21,600. Okay. Out of that, I want my spread to be 3% of that 12%, not 3% of that 12%, but 3% of the 180,000. So 180,000 times 0.03 is $5,400. You divide that by 12, and that's $450. Okay. So for me, the quick way of thinking about it is that I just want a 3% spread over my costs. So I know my mortgage is going to eat up between 2 and 7%, depending on what sort of mortgage I get, right? If I get a favorable term, I'm going to get 2, 2.5, 3, 3.25, something like that. If I get these crappy terms on these rapid refinances, I'm looking at 6 to 7, depending on factors, the neighborhood, the loan size, etc. Fine. Automatically, that's lost. Then there's going to be another portion that's going to be lost to general maintenance, long-term maintenance, and your month-to-month bills. So you're going to lose a few percentage points there, probably another 2 to 3%. So if I'm targeting to make 12%, or more, if I'm targeting 12% or more, then I know, all right, 9% is going to get chewed up by the property. The other 3% is going to be for me. And that's why I always tell people my current goal for my real estate portfolio is to get to $100 million in assets in the next, I have 6 years to get it done. So if I'm making an average of 3% as my cash flow spread on the 100 million, right, based on that value, I'm going to net $3 million on my portfolio per year, not to include the benefits of amortization and the depreciation of that asset and how that affects my taxable liability. Okay. So appreciation, paying down of my debt, and depreciation all help to bolster up what my true takeaway is. And it'll probably be closer to about 6-7% true rate of return if it's yielding 3% cash flow. Okay. When you look at the entire investment. So over 30 years, 7%, plus you could factor in appreciation. That could be much, much higher. Over 30 years, you do really well. So that's what I look for. It's not necessarily cash flow per door. It's all about the asset value and what sort of spread or percentage I'm looking to make on that asset itself. If it was $100 property, it would be the same. If it was $1 million property, it would be the same. If it was 50 million, I'd aim for the same, a 3% spread. Long answer, sorry. What is going on here? StreamYard is hurting me. Very weird. Yeah, I'm not able to take off these questions. Hey, Aida, welcome. Yeah, I don't know what's going on with StreamYard, but I can't remove the questions. It's acting up. All right. So the next question is, what are the requirements to enter into this program? The requirements really are that you're going to son of a okay, whatever is going on here. So you have at least $10,000 to contribute. You are going to be committed to the deal. You're registered for the program. Right now, I have enough interest that I'm telling people to pre-register just so that they could get the course material covered, because I don't want to just be re-lecturing what's already covered. All right. You should be going through the program, getting the education, and now putting your education to practice. Kind of like college. Read the syllabus, read ahead of lecture. You're going to be in better shape for school if you attend class. All right. So that's like the minimum three. The next thing is, I don't really want anybody who that's their only $10,000. I don't think people should put themselves in that position. If all you have is $10,000 in savings and you just want to do a deal, I don't think it's for you. So that's something that I try to make sure that people have enough liquid money that they're not stretching themselves to make that deal happen, because not every deal works, right? Not every deal turns a profit. The majority of them do. I've never had a total loss, right? So it's not like I'm going to do a deal and then somehow default on that deal and just lose everything. That's not going to happen. Typically what's going to happen is that maybe I take a loss of a few $1,000s, and it might be negligible to the group. I might absorb it 100%. If it's, let's just say it was a bad deal that we got into and I somehow dropped the ball or something went wrong beyond the typical margin of error, and we lost like 3,000, 5,000, I'll just eat that and at least make sure that that investor group kind of retains their money. But the reality is I'm under no obligation to do that, and that there may be a loss like that incurred. If a loss doesn't occur, then it's typically going to be small. But just because we have such a margin to work with, we're looking at deals that we can get at 80% max, depending on the property values, max total deal at 85%. I usually like to keep it at 70% or less. So if we get into something that's pushing 75, 80, that's kind of like the upper limit of what I would do. Deals like that, you still have 20% of room to negotiate and as buffer. So if your deal was set to 80% or less, we shouldn't be in a losing situation. It's just a matter of how sweet the profits are. Oh, thank you for the support. I really appreciate that. I think the course is good. I made it, and I made it so it's not cheaply done. It's like I said, most episodes are about an hour. Me lecturing, slides. You could go through the PowerPoints on your own. You could watch the lectures as the PowerPoints are kind of presenting between the talking head and etc. It's actually in a property that I rent out now. It was a property that I renovated in Freeport, Long Island, and I moved into there for some time. And I was like, I might as well film in here too. So it just shows you that I even sometimes bounce through the properties that I'm doing if my situation warrants it. If I sell one house or I have a need for bigger space, or this house was right on the water and I liked it, it's like I'm going to live in here for a while I figure out what I want to do with this particular deal. That was my deal, so I could do that. If it was an invest and learn deal, I wouldn't do that, because then that kind of defeats the purpose. But I was living in there right before I moved down to Florida, and as I moved, I ended up renting it for like almost $5,000 or something like that per month. So that the set where I'm filming it is a property that I flipped. It's a property that I bought that for like $180,000. It's probably valued at like $550 right now. It was a hurricane house damaged by not Katrina, but the one that came through New York, whatever that one was called that devastated New York. I got two of them actually. out of that deal. Tyrone is taking the course too. What's your thoughts? The property looks great. Yeah, it came out pretty good, man. Thank you for that feedback. But there's a few things like what I'm doing. So that style is something that I've been using for like 2019, 2020. So you see that 19 Elm Street had the same look, the like the maple floors. You saw that 19 Elm had that, 26 had that, 1323 Peekskill had that look. Another property I posted recently, which is kind of like how I do my rentals, has like gray laminate floors. So I'll kind of save money there. It's a quicker install into rental property. So it still looks good. It's just cheaper. So that had like the gray tones. 10 Alden, which was the one that was like, oh man, this is a bad deal. I ended up making money on that. Not much, but some. That was a dark floor or dark theme. So you could kind of, if you look through my videos and some of these deals that I'm rattling off, you'll see that the style changes from time to time. But I'm doing my property now. It's a 3-family that I'll be house hacking in because I'll be living between here and South America. So it's a 3-family in Fort Lauderdale that is going to be a vacation rental. 2 of the units, full-time vacation rental. My unit will be used by me when I'm in town. And when I'm not there, bam, on Airbnb. But I'm testing a few different styles of looks, things I will try at different price points that are more current. So I'm starting to look at the styling. Like I feel like how I did these properties will look current for the next, 5 to 7 years. And it's kind of timeless looks, subway tiles, white, it's those are kind of timeless things. But I'm starting to look at kind of where design is going now, and I'll start to kind of create my next few looks so that I'm always staying fresh. You'll see some flippers still finishing houses like it's 2010. You can't do that. They're systematic in their approach, but they're not keeping up with the times. So even when somebody walks in, it feels dated, and you don't want that to happen. Regina, I know it's off topic, but have you thought about doing charter share flights? I've thought about everything, but a lot of regulation in aviation, a lot of maintenance. Maybe when I'm like 45 and 100% retired, I might revisit that idea. I've had some ideas with chartering flights. I think privatizing flights can be made more affordable. There's a few services like Blade and a few others that are offering some pretty cool solutions. I thought about doing like specialized flights. For example, I went to Haiti, right? And that's my parents' country. And we went from Port-au-Prince to, what's the name of that town? Man, I can't remember. Jeez. Well, anyway, we went from Port-au-Prince to I can't remember, a town outside of Port-au-Prince, about 3 hours driving. Maybe 45 minutes, an hour outside of Port-au-Prince, there were no more roads. We're on a dirt road going 20 miles an hour for 3 hours. And I see nothing but land, awesome ocean views. And I was like, this is ridiculous. There should be a flight taking you from Port-au-Prince to this section of town, especially people trying to develop it for tourism, etc. I was like, this is ridiculous to drive like this. And then I remembered I took a flight from San Juan Executive Airport to Culebra in Puerto Rico. And it was a, small 6-passenger, 8-passenger plane. And I was like, that would be a perfect shuttle situation that Haiti needs. Especially if you're doing you could get like a Pilatus PC-12, which is my goal. And you could land on gravel. You could land on grass strips. It's a pretty versatile turboprop. But that's play and talk. So yes, I've thought about it at great length. Okay, cool. Happy New Year. Happy New Year to you too. What's the official like cutoff for wishing people Happy New Year? Yassine, do you have your own contractors to work on your flips or you hire randomly? The majority of the flips I do are with my construction company. I have a contracting firm called AVC Equipment Holdings. Um, I have 3 contractors that I work with routine, like 3 crews that I work with routinely. And I do actually take on projects outside of my own projects. So if you're looking, let me know. We service Northern New Jersey, New York City, Long Island, and like up into about Newburgh, New York. So that's pretty much Orange County up into Putnam. That about 75 to 100 miles outside of like radius from Queens, New York is where we would service. So if you need somebody, let me know. Email me, shoot me a comment, and then I'll get you in contact with my project manager. He handles the nitty gritty of the day to day on that. Scale. You have to try. Yeah, I want in on the next class. Arlie, I keep telling you, man. I understand the thinking. I'm the same way. I want to be in on everything. Pick a lane, man. This life is not good to be scrambled like the way I am. If I could just pick one lane, I would be 10 times more successful in any one of my ventures for sure. Because I'm spread across like 7 things. So imagine if I was focused on one, what that would look like. So I encourage you to do the same. I know you got ENTP problems, man, but if you can, please take that bit of advice. So if the Constitution, okay, so if the construction took 8 weeks, why did the project take 7 to 8 months? The construction takes 8 weeks. Okay. If you're starting, I don't even know if I close, when did I close on this? September, maybe October, sometime like that. We were in coronavirus and it was just starting to get chilly. I think it was October that I closed on this property. So close on the property, the crew probably gets in there about a week after I close, right? Because I might have them on another job. That's number one. Number two, if I close in the middle of the week, I tend to start projects at the top of the week just so the weekly payout makes sense because most of my guys are salaried. So I'll activate them on that. So week 1 was most likely in October. 8 weeks takes us into December. We listed the property like December 12th or December 11th. Okay. So that's only 2 months, right? What's the other months? The property has now been listed for about 30 days. So we're at month number 3. When somebody comes along and places their offer, we accept the offer. They're going to go through their entire process of their due diligence. That's probably going to take them about a week or 2 to get contracts signed and their inspections done and all that done. And then they continue with their mortgage process, which is going to take 45 to 60 days, maybe sooner if things move along. So that's why you fall into that 6-7 month range, because if we have the property sitting for about 2 months, right? It took us 2 months to do the construction, 2 months to find a buyer, 2 months to actually get to the closing table. We're at 6 months. Stretch it out, 7 months. All right. So that's what I'm saying. So I'm already counting forward that I'm going to be carrying the property for maybe 3 to 4 more months from this point to allow for buyers to close. Meanwhile, the other property that I highlighted, 23 Wawayanda, that was the house with like the gray floors. It's a little 3-bedroom, 2-bath house. I bought that house. I closed on it in November. I was done with it maybe right before the new year, right before Christmas. It was about a 4-week job. And I'm already have it listed on the market and I'm doing my refinance. I should be out of that deal by February. So we're looking at 2 to 3 months on a rental for me to be fully invested, do my construction, get a tenant in place, to 6 to 7 months to sell. And when I do a rental property, I'm usually doing a cash out refinance where I'm walking away with cash from that refinance if I really bought well and I managed the construction properly, or I'm walking away with even or maybe a little money tied in the deal. But it's only gonna take me about 3 months to be in and out and generating income on that property, and I'll still have about 40 or 50K of equity. Like Warianda, my construction budget was 40 grand. I spent 105 purchase price. Appraisal is going to come in for about 220. I know my pre-appraisal came in for 200. I think the refi appraisal is going to come in for 215, 220. So what does that mean? I'm already up 55, 65, $75,000 in equity. So after paying that house down for 5 years, 7 years, 10 years, and I sell that property off, I would have been cash flowing that entire time, and I probably end up with, a 100K check for me at the end of it all. So I prefer rentals, but that's the answer to your question. Chris Evans, Michelle. Hey, Carl. What are some things when it comes to flipping you're willing to spend money on and things you try to keep the cost low? I try to keep all the costs low. But where shouldn't you skimp? I think on the final look, to me, it's the final look that matters the most, because you could spend $9 a square foot on some engineered hardwood floors or some solid hardwood floors at that, or you could spend $1.80 a square foot on engineered hardwood floors, and they will look and feel the same when somebody's in there. One might be rated for 10 years, the other for 15. One might be rated for 15, the other for 30. So I think it's more important that the final look is what gets people excited if I'm flipping a property. I try to cost contain on the trades. That could cost a lot. By the trades, I mean electricians, plumbers, mechanicals. I try to see what I could get included with my team and what I would have to pay a licensed tradesman for. So I try not to get them involved unless it's absolutely necessary. It's either beyond my crew's scope or required by permits. But then you might have one guy try to that will charge you $20,000 to rewire your house, and somebody else who charges you $9,000, both licensed. So I try to find like a independent licensed electrician versus an electrical contracting company, because that independent guy may have no overhead. He may be a little disorganized, but he has no overhead to worry about. Meanwhile, the firm has the receptionist, the person who comes out to do the quotes. They have all their vehicles. They have commercial insurance on all the vehicles, right? What's going to happen? That those costs are going to be passed on to you. So those are areas I would try to save on the trades. The things that are behind the wall and the things that are in front of the wall, just be smart. Like, can I achieve the same look with a lower cost material? Can you achieve, like I said, could you take a $2 per square foot hardwood floor that looks comparable to a $7 hardwood floor? And is it going to look awesome? Is it going to lay awesome? Is it going to feel good under people's feet? If the answer is yes, you go with the $2 one. On a 2,000 square foot house, that's the difference between paying $4,000 for your flooring materials and paying $14,000. That's where you're going to save money. Hillsdale property. If the construction took 8 weeks, why did the project? Okay, I think I answered that. So hopefully I got that question out the way. That, 1 second. There we go. That's what happens when I'm not paying attention to time. I got a timer on my camera that I haven't figured out how to override yet. Okay. That also means that Instagram is about to cut out, which it just did, and my cell phone died. Perfect. All right. So hopefully I didn't lose that whole live, and it stores it. That was super helpful. Thanks for answering my question. You're welcome. That's what I'm here to do. All right, I'm gonna try to fly through the rest of these so I could go home, work out. Where's a better Where's a better 100K investment in Florida? West Coast or East Coast? I'm new to Florida, right? I moved down to Florida last January. It's been a year now. And I've been mostly focused on my home care business, even though I speak mostly about real estate here. The thing that's been taking a lot of my time is my home care business. Um, so I only know my immediate area. I haven't gotten into the nitty gritty of Florida as a state. Um, I like Florida, but I don't know the answer to that question. I see property values are pretty robust in like Naples, um, certain sections of Fort Myers, certain sections of Fort Myers or like Lehigh Acres. I saw that they're kind of building a lot of duplexes, and I feel like that's more of a working class neighborhood, but you might be able to get a new construction for like 200 grand, two family. I think that's pretty cheap. Because you're paying 100 grand a unit, and one unit might run you $600 a month as far as obligations are concerned. So if you're able to rent out for 900, which I think you can, I think that's good. So that's all I know so far. I'm not that well versed in Florida, but soon enough. Sorry, guy. I was your first like. I blame the current event for the zero comments. Oh, gotcha. The current, the current environment. Gotcha. Awesome. Okay, Arlie, where do we pre-register aside from 10K? How much is a comfortable amount of capital needed? Is your suggested amount to reserve per each 10K? Not quite sure what that question is, but I'm going to try to answer it as best as I can. So, to pre-register, or to put yourself in queue to be someone who's considered reasonably, go to www.entplife.com/killing hyphen the hyphen American hyphen dream. I'm going to put that link down below, and I also have it in the comment section of the videos, of all my videos. Register, even if you register at $97, you don't need to do the $2,000 plan. The $2,000 a lifetime thing, and I put that in there because I paid $2,000 for a course, and that made me actually do my first 203K program. So I have it as like a motivational price. If you pay the $2,000 price, you get access to that course and any other course that I put out. I'm actually going to be putting out a course on healthcare staffing under the ENTP Life banner. So if you bought into the $2,000 plan for 1 to 4 family real estate, you get the staffing included. If you, I'm going to be doing 5-unit and higher, like multi-family residential. I'll do a course on that. That also, if you pay that $2,000 enrollment, you get whatever I create, you have access to it, because at least I know you're serious and you're consuming information. You're most likely going to do something with that. So that being said, you register at that course, go through the course material. Obviously, you and I have been in contact over the past few weeks, so I know what your level of interest is. Being that you're down in Atlanta, that might be a little sticky because I want people to be able to go, like this group is composed of people out of New York. They're able to go in Texas, but they're able to go to the property, visit the property, see it, feel it, meet with my contractors, meet with the project manager, ask questions, see the stages. They could go as frequently as they want. So proximity helps you get the bird's eye view, see things, how it's tower laid, what to look for, identifying mistakes, those sort of things. There's going to be mistakes that you see in person that you'll never see in a final photo. So how do you point that out? How do you communicate to your contractors that you want it fixed, right? So I think it's important that you're local. And then, I kind of screen the people to see what their personalities are. I try to match personalities so that, if it's kind of a boisterous group, like my current group is a little more kind of comfortable with each other and relaxed. If it was a group of like kind of reserved people, I'll try to keep that reserved tone together. So I try to get a good read for people who could work well together. I even try to pair up people who have different skill sets. Some people may be, I see how they communicate with me. They might be more meticulous in their communication. Their follow ups are prompt. Uh, their educational background, professional life shows that they're kind of systematic people. I might pair somebody up like that in a group with someone who is very abstract, maybe creative, has the design eye, but structure is bad. They might be interior designers, interior decorators, but they're not good with numbers. So I'll try to create a group that's cohesive because they may turn around and do another deal outside of me together. I would love that to happen. That they say, hey, you know what? Let's do the next deal by ourselves. You could still always tap me for questions, but then you cut me out as being an equity partner. You turn a higher profit at that point, but that's your progression towards independence. So I really try to develop and cultivate teams that have a high probability for success and a high probability of working well together in future deals. And I try to keep each group to about 5 to 7 people. You could come in for more than 10K. Obviously, people who come in for more, then there's less people in the deal. It's a little more focused. But I don't want to have like 20 people in one group. It's too many people to manage, and it's not fair to those who are trying to learn. What's going on, Ben? Sandy. Very well put together, professionally done. Thank you. Appreciate that. Hey man, love the lives. Can you do a trading live sometime? Grazie. Actually, what's funny, I liquidated my trading account, I think last week. I'm so confused by this market that I'm very pessimistic of the future. And because of that, I'm kind of hesitant. I'm churning myself. And I know myself well enough that when I get to this phase, the best thing for me to do is be out the market, right? Until I'm clear and my bias has faded. I got political biases. I'm concerned with China. I'm concerned with coronavirus. PPP round 2. I'm seeing egg prices hitting $6 a dozen. To me, the environment that we're in now is artificially pumped and doesn't make sense. I'm just waiting for tragedy to strike. And because I have that bias, it's making me less likely to hold good positions, more likely to take short positions while the market's in the uptrend, stupid things like that. So I just said, you know what? Before I start, losing money for the year, I think I'm only down like 6,000 or 7,000 for the year. Last year I was up about 31% on my investment or the capital I have in the market. So 31% is a solid year. I'm only down 6 or 7,000, which represents a very small percentage of the money that I have in. And I was just like, I'd rather just have that money out. Because if my money, that's another thing. If my money is in my trading account, I'm going to be looking to trade. I'm pretty active. So I can't just have my money sitting there and not being worked. I don't do well with just my cash sitting in that account. I need to physically move it back into my bank account and say it's here in savings for it to be truly in cash. It's just my quirk. Um, and my trading, I usually initiate my trades in the first hour of the day. So I'm not like an active day trader where you're going to be seeing like some days I may do no transactions. Someday I just may be filtering through. So I think a better way for me to do some trading education would be I still need to continue where I left off. I'd probably be doing maybe live chart analysis in the evenings, kind of looking back at the day, kind of systematically looking through the setups that I like to trade, and then a live session. It's going to be at 9:30 a.m. No way, because I'm going to be in the middle of answering questions related to home care, up and out of my desk all the time. You're not going to learn anything from that. That's for sure. Hey man, love the live. Oh, this is the same question. Sorry. I'm a veteran. Am I able to use my VA certificate for what? Are you saying like for education? I really don't think so, because it's not an accredited program. I'm not sure what the guidelines are. But I know as a veteran, you're going to have access to VA loans, which can be 0% down, favorable interest rates. So you're definitely going to want to look into what your VA benefits offer you, especially from a real estate perspective, because you get some deals that I never would. Salvi. I don't know what that means. Okay. A good source for good and reasonable contractors, electricians, etc., is your local Navy Reserve. Enters with a construction battalion unit, CBs. I've never. Yeah, I'm not. I'm not so sharp on um on military affairs, but I guess that's a pretty good idea. Guys who are enlisted, work to trade, and then now they're either out or they're stationed in like Virginia Beach or something like that. They're stationed and they're picking up extra work after hours. I guess that could be a good source. Manny, do you still own rental in Port Jervis? If yes, how are the tenants? I still own rentals in Port Jervis. I have some tenants that are problematic. I have 2 tenants there that are behind on rent. And it's because there's no recourse for them. I can't penalize their credit. I can't evict them. So those 2 are behind on rent. One is on a payment plan, which is good because they're trying to make their obligations. The other has every excuse in the book. And then I just leased up another one of my other properties in Port Jervis. They move in on the 15th, and that was the one that I said I'm collecting 18 or 1900 for the month on a $100,000 debt obligation. So the cash flow on that is pretty nice. And I'm in for that deal. Oh crap! I'm in for that deal for $0. That one is listed on the channel too. Paid $27,000 for it, renovated it completely, new plumbing system, new plumbing throughout, nice, really nicely done. And it's now appraising for 180. At the time, it was appraising for 160 or something like that. I did a cash out refinance at $100,000 on that property. So I was able to be in and out for a break even, and have no money trapped in that deal. And those are the ideal rentals because now I have a huge spread in equity. My debt is like 60% of its value. And I'm collecting $1,800 a month in rent. So it's those deals I like, because once again, it just bolsters my net worth and it gives me money every month to do whatever with. All right, I'm going to answer these next few questions, and I'm getting out of here by 9:30. For New York, how long is the typical seasoning period before you could refinance? It depends on the lender and what sort of refinance product you're looking for. I think most lenders are looking for 6 months to 1 year. But the majority of my refinances are done with a rapid refinance, because I'm usually looking to get out of that 2 month range, because I'm usually in at like 9 to 10%. So I move from like 9 to 10% interest rates on my hard money down to something that's like 6%. And then I have too many properties at this point that the conventional lenders don't really fool with me. And I would have to kind of season multiple properties at high interest to bundle them together to do a portfolio loan. So I'd rather do the rapid refinance on a bunch of properties. That way I'm adding them up. And like I said, each property, I'm easily adding $50,000 of equity to my books. So the method that I use is speed. And, in 1 year I might do 15, 20 properties. If I'm keeping, 15 out of the 20, all producing 50K of equity or more, easily like that's 50,000 times 15 by times 10. It's what, $750,000 of added value, or added to my net worth for the year. 50,000 times 15. My math is getting bad. Yeah, 750. So I add $750,000, and then, whatever in maybe another $4,000, $5,000 in cash flow. That's a good year. So when looking at, I guess, when looking at the seasoning period and what the strategy is, I'd rather accumulate a lot with kind of not so great terms that I'm still making money on. And then in my 5-year scope or 7-year scope, I could choose to once again repackage that debt down into whatever is best at that time, whether it's a portfolio loan, etc. Or I can choose to liquidate the entire asset group. That way I could shore up some cash, roll it over into another deal, not pay taxes on it by using a 1031 exchange. And I have options. So I think seasoning periods, if you're just getting started, you're going to be looking at 6 months to 1 year for most traditional government-backed products. Tampa, awesome. I'm looking. There's a few companies that I'm eyeing in Tampa actually to purchase, a few home care agencies. So I'm going to be in Tampa probably next week. Yeah, I'll probably be in Tampa next week. Keep in touch. Damien, if you want to understand the markets, listening to Gregory Mananarino's channel, you would like his track record and personality. Yeah, I'll check him out. I really don't like to, even though I'm one of the voices on the internet, I really don't like to take in too many people's voices, because it gets noisy in my mind, because then I may overvalue somebody's approach because I like their personality, and it's not quite the match for my investment style. I've been through all that. I don't need any more coaches. The only sort of coaches that I would need would be if I was looking to start moving into fund management and kind of looking at the structure of funds and that sort of thing. I wouldn't be looking to others for strategy and stuff like that. I'm not to, poo-poo your comment, but for me, it's not the case. Other people might think that he's great and can learn from him, but I know myself, I don't need any more voices in my head. I've got too many. Sorry if you already covered this. what would be the percentage return on each participant's investment? An investment period is about 7 to 8 months to a year, correct? Yeah, the investment period is going to be, I would say, 6 to 7, maybe stretching out to 9 months, depending on the scope of the project. The returns, I would say, it really depends. And there is no promised return. But let's just say in a typical deal, right? Let's just say a typical deal where the after repair value is $300,000, right? That's common in the suburbs of New York. Go into the nicer neighborhoods, it's going to be 5, 6, 700,000, and even higher. But let's just say it's 300 to 400,000. We're going to use 300,000. On a $300,000 deal, lenders aren't going to lend more than about $210,000 total, right? And if they're going to lend $210,000 total, they're going to expect you to be in for some money, right? So on the project, they're expecting you to be in for at least 15 to 20% of the project cost. So if the project is costing 210, 220 even, let's call it 200,000. The project's 200,000. They're going to want you to probably come up with $30,000, right? So the most that they're going to lend you is 170. You're in for 30,000, and the property is worth 300, right? After your fees, carrying costs, maybe you add another 10% for that, right? So 220. You sell, you're going to lose 5%. So 15,000, let's take that to 235, right? So now this $300,000 deal really cost you $235,000. You made $65,000. Your cash in was $30,000 on the front side, maybe some more carrying cost, but let's just call it $30,000 cash exposure on a $65,000 profit on that particular deal, which is a pretty good deal. You're talking about you made 200%, right? Now you could have a similarly structured deal that when it's all said and done, the cash requirement was $100,000, but the profit is $40,000, right? That $100,000 cash on cash return is going to be 40%. But then it goes down to, what did you negotiate with your investors in the invest and learn? What percentage of the deal are they getting? Are they getting 10%, 20%, 50%? If they're getting 50% and they're the full 100,000, then they're going to be making 20% return on investment. If the profit ended up being $40,000 and the cash requirement was 100,000 and they were all the cash. So it really depends on how the deal is structured, to kind of put it simply. But I just wanted to show you that in one scenario, as an individual, you could be in for $30,000 cash, maybe even $40,000 cash, and see 150% to 200% return, which is nice. On another token, you could be in for 100K cash and only see a 30% return. And I only say 30% because it's only 30% compared to 150, but 30% is still monstrous. You have to look at this from the perspective of, is this strategy scalable? If I made 30% twice a year on $5 million, what does that look like? That's a $3 million profit. Okay. Am I doing enough deals to make that? Yes or no? Is my strategy going to work if I scale up to that many deals? Am I doing 20 deals, 30 deals a year? Okay. So 30%, like I said, on $5 million is good. 30% on $100,000 may only be $30,000. That's not really going to change your life too much. It's more money than you had before, but I would much rather make 30% on $5 million or 30% on $100 million than 30% on $100,000. So you may have $100 million and be happy with 5% annual yield or 7% annual yield, right? The amount of risk that we're taking on being real estate flippers and investors, the rate of return has to be juicier than 5 to 7%. because you could get 5 to 7% by just being a lender and backing investors who are holding on to long-term rental properties, and you give them a rapid refinance at 6%, and they're happy with it like I am. And you make your 6% just passively while you essentially own that property until they pay it off. So, long answer to a short question, but that's what you're looking at. So even if you walked away with 20%, 15% in that 7 to 8 months, 15% versus other asset classes is really good if you look at percentages. Like I think Berkshire Hathaway averages like 10 or 11% over the lifetime of their fund, and that's one of the top performing firms. So you have to put it into perspective in that way. The S&P, I think, has averaged like 7 or 8% over the past 100 years or something like that. I don't know what the stat is, but you have to be realistic with what a good rate of return is. Jesus. Okay. In the future, if I got a 2 to 5 unit, lived in one, and rented out the rest, would that be good? Yes, I would say 3 or more would be better. 5 unit puts you into a whole different category. That's considered multifamily residential. You're usually going to have to come up with 30% down. Sometimes I think now some lenders are looking at 35. Some lenders will do 25. FHA has a 13% program for multifamily residential. Chris, hello, Haitian cousin. I'm starting my 2nd semester of nursing school, following in your footsteps. Keep it up, man. I think nursing is a good track. It gives you a lot of options. Just really know what you want to do with your nursing degree. There's so many different places you go, whether it's administrative, whether it's bedside care. Know yourself, know what you're going to do, and don't just do it for the money. I think it's a good track to have a profession under your belt, but really know what you want to do in healthcare. I think a weekly commentary on what you're seeing in the market and the economy would be interesting. Yeah, I guess. I don't know. I think I could add that. I could every now and then, but I'm not so burping all day for sure, man. Talk too much. He was in a demo for my software earlier today, and same thing, burping. Sorry, dude. But yeah. Okay, I think a weekly commentary. Yeah, I could see that, but it's week by week. The economy doesn't move week by week, so it's like that you're gonna just be getting my feelings. I might be feeling a certain kind of way because of one transaction that went bad that's weighing heavily on me. So I don't think you want that. Like I said, too much information can sometimes be super noisy and hurt how you make your decisions. You could definitely overload yourself with other people's comments. Makes sense on the noise. I listen to so many people and opinions that I am so confused regarding what to do next. Yeah, you need the most important thing. I think I did a post on this the other day on my Instagram. The 2 most important things that dictate a entrepreneur's success is their ability to be self-aware. Okay. Self-awareness is probably the most critical thing, and your ability to solve problems. Right? Oh my God. I'm here too long, man. I'm having fun though. So, what I was saying is that 2 most crucial skills that an entrepreneur needs is the ability to be self-aware and the ability to solve problems. Okay. And the self-awareness piece is such a big piece because you need to know what your strengths and weaknesses are. You need to know when you messed up so that you're able to build a team around you that supports you where you're weak, and that you're able to identify what you're doing wrong so you don't keep doing the same wrong thing over. Success is usually like, it's like refining oil. Okay. You go from crude to, you know, gasoline, super, whatever it is. And you got to go through multiple phases of getting scrubbed down until you get that premium thing, or like a diamond being, you know, carved or etched. It's the same way for you. Very rarely does somebody just come onto the scene and hit it out the park, because no matter what, there's going to be some difficulty. There's going to be some hard time. And if you're not self-aware to know what's causing your hard times, is it you and something that you're doing? Is it your own deficiency? Is it your own ego? Is it your own stubbornness? Is it your own lack of education? Is it you being overly aggressive? Whatever. You need to know why you are having the problems in your company. And you being self-aware allows you to accept that you're underperforming or failing or taking the wrong turn and riding your course. Nobody can tell you that for you. You could work with a business coach and they could listen to you, and they may be keen at identifying your gaps, right? And saying, yeah, I could talk to somebody in 2-3 minutes, say, okay, this is where you're messing up. But you need to be that person, right? So the best thing that you need to do, know yourself, know your strengths, know your weaknesses, and live within the parameters that are you. So that when you're getting information, it's information that supports the you that you know that you are. You could get, everybody's going to have a, you know, I like oxtail. You look up oxtail recipes, there's going to be pretty much a standard way about approaching oxtail, and then there's going to be 1 million variances of that oxtail recipe, with everybody who has their own touch input way of doing it. It's the same with everything else. So you just need to know who you're going to listen to, what narrow group, why you're listening to them, because you like their communication style, you like their insight. And then you need to exercise and put to work whatever it is, and then feel it and say, okay, this was good for me. This was bad for me. I think I could do better, or I think I could do worse, or I think you have to analyze your work. You have to reflect. One of the most important pieces of the cycle of your business is reflecting on everything that's happened and then recalibrating yourself. Because it may be your team, it may be you, it may be economic conditions. But if you're not reflecting and being honest with yourself and the external, you're done. And then I think, Susie, one more thing. You need to do as well. You need to take action. And maybe that's what my quote said, self-awareness and action. I don't know. So when you need to take a particular action, because if you just stand still, you're never going to go through the refining process. You're never going to get the answer. You're never going to even know who was right because you're going to do nothing. So get some level of information, some level of understanding, and do. And in your doing, you're going to also learn a lot, because you're going to find out, like Mike Tyson said it, everybody has a plan going into a fight until they get punched in the face. You're going to get punched in the face at some point in your business, in your venture, in your life. You're going to get punched in the face. It's going to hurt, and you're going to have to say, okay, How do I make sure that doesn't happen again? Right? Because it was painful. Or, you wake up on the ground and say, well, how did this happen? So in having the experience in getting punched in the face or being faced with, like, I wasn't expecting this hole in the wall, or behind this door, I wasn't expecting this hole in the wall. What am I going to do? Nobody said this. And that's when you're going to be like, okay, I have a new situation here. I have to figure it out. And that's where the true learning takes place, is in the doing, because there's going to be variables, weather, economic conditions, crazy politicians, all things, coronavirus. Who knew that was going to hit us the way that it hit us? Right? Nobody knew that. And nobody gave you advice for that. It's going to be part of people's advice going forward, but you may never, ever come across that circumstance ever again in your lifetime or in your business cycle. So how could you count on that? You have to do. And you need to, like I said, you need to trim down your sources of information, and you need to know yourself and know what sort of teacher, what sort of advice, what sort of medium, whether it's video, whether it's books, whether it's lectures and seminars, what environment nourishes your mind the most, and trim that down, and then take action, and you'll be all right. Paralysis by analysis. It happens. And it's usually not by analysis. It's usually people who get paralyzed by analysis, the real thing that's killing them, they don't talk about. They usually have fear, self-doubt, something going on. It's that voice, that negative voice in their mind that says, I'm not good enough, I'm not smart enough, my speech isn't okay, my math is bad. All of those crazy negative things that run through my mind. Like, it happens to me too. Sometimes I'm getting ready, like right now I'm getting ready to raise $20 million for home care acquisitions. And then I start doubting myself. Like, oh man, can I do this? And what are they going to think about my age? What are they going to think about my race? What are they going to think about this one business that didn't work out so well? What are they going to think about the decline in my census because I took an inactive role in my home care agency to prove a point to my partners? Why was there a decline in revenue in 2020 other than coronavirus? These doubts run through my mind. But the thing that's even more scary for me is not trying. So when people get paralyzed by over analyzing, they're just not comfortable with themselves, and they're typically not comfortable with how the public's going to perceive them if they're wrong, as if the public is feeding them, as if the public are sharing their beds with them. It may be their partner sharing their beds with them that may perceive them negatively. But these are the sort of thoughts that run through their head, and then they make them say, nope, I'm not going to deal with that level of embarrassment, or I'm not going to deal with that level of being broke. And what I say to all you guys who have entrepreneurial dreams, I've been to the bottom. It's not that bad. It's actually rather freeing when you hit broke, because you accept it and you say, damn, I'm broke. Right? You realize where you wasted money, what material things you wasted things on, and why did I spend money on that car or those shoes or that belt? Who was I trying to impress? People who I don't even know. People who were walking by me on the street didn't even give me advice. They even spit on me. Did they even see me? Or did they look at my shoes and say, $1,000 shoes, you're an idiot? What happened there, and what was I doing? So when you go broke and the bill collectors are calling you, and you tell them, and you pick up the phone, and you, instead of ignoring the phone calls, you finally start answering them and saying, yo, man, let me tell you something. I'm freaking broke. I'm negative 50,000 right now. So would I like to pay you so that you don't call me anymore? Absolutely. But I can't pay you. And on top of that, I'm not even paying you. I'm paying the company that pays you. So you could tell your company, I ain't got it. Sorry. And if you want to call again tomorrow, the answer is going to be the same. And, I might even, you get a Filipino, somebody from the Philippines or India, you start having conversations with them about what is life like there? What are they earning in wages? How do they like their job? How do they like working for American Express? How do they like this? What sort of feedback do they get? How many phone calls do you make per day? Literally, these are conversations that I had because I'm trying to figure out, like, all right, if I start to outsource services, I could save money there. And what is their experience like? How did they get hired? What's their call center like? How many employers? Like, I started to probe the debt collectors. Do they get a commission if they collect? How much? What helps you? Is there a quota that you need to reach for the day? Because you're answering my questions, I'm going to pay $25. That helps you reach your quota. That's all I got for you today. Yeah, I got $20,000 outstanding, but you get in a payment $25. Going through that process of public failure, your friends and family seeing you on your downside, and realizing that there's still people who think you're attractive somewhere. You're still, for me, I was still able to have, relations. I wasn't living on the street. My parents still loved me. My girlfriend still loved me at the time. I had a job. I found a job. I was working still. I never gave up my jobs. And I completely reset my attitude to identify what worked well for me and what didn't. And man, it was one of the best experiences I had. I would probably say top 4 things that shaped me. Witnessing murder at 11 years old made me realize I live in an environment where you could get killed over Chinese food. Okay. I don't want to be in this environment, and I don't want to get killed over trying to steal Chinese food. So that's out of the book. Watching my brother become a drug addict and knowing that I have the potential to become an addict, I think was another defining moment for me. And these are negative things. Blowing up in business and financially for being over leveraged, not being prepared for the 2007 to 2009 market crash and what that would do to the debt markets, and being heavily dependent on debt to run my businesses. And my ayahuasca journey, which I'll probably be talking about next week because we're about 1 week away from that. All of those things help shape my way of looking at life and fear and whatever. If it doesn't kill you, who cares? And if it does kill you, death isn't that bad because I've tasted it and it seems okay to me. So I'm going to close out there just to let you know that in reality, you could do whatever you want. Do not fall into a pattern of just wishing that you were doing something that somebody else was doing. Do it. Try to do it as best as you can and evaluate your actions so that you get better and better and better at it. You miss every shot you don't take. Good night.